Hello, you guys. Welcome back to the live streams. Can you guys? I think you can hear me. Okay, cool. I think we're good to go. What's up, you guys? Welcome back. Hope everyone is doing well. As we get started here today, we got some things to dive into and to chat about. I see Phil is here, Kenny, Jack, Rustenberg, Theo, AI Knight, Dade. Welcome, you guys. How's everybody doing? So we've got to talk about some of the stuff that's moving here today, which is kind of what we do every day on the stream. So I'm just going to dive right into it. Basically, we have gold sort of moving up here, and I want to talk about this to see where gold wants to go, because it does look like gold is making another breakout today, pushing higher, which is very much bullish for the last couple of days. We've actually seen this thing moving higher. So let's keep an eye on it. So good morning, everybody. Hello. I see a good number of you guys tuning into the stream. I see Mohammed, Farhad, Victoria, NNA, Humphrey. Good morning, good afternoon, wherever you are in the world. So yeah, gold does seem to be doing a little bit of a reversal pattern here, and I wanted to talk about it as we go into the end of the week here. Now, I mentioned yesterday that I'm in no rush to sort of go buying gold, although it does look sort of bullish and things are looking nice. If you remember from yesterday's stream, we basically got the idea that the COT reports for gold are still sort of bearish, right? Based on what the big players are doing, they have been selling gold for a while, and so I am hesitant to jump to any sort of conclusions here to say, oh yeah, gold is absolutely reversing. Could it be? It totally could be, but I don't want to sort of, again, conclude to myself that, hey, it's completely reversing. We still have bearish tendencies here. We still have bearish control. We are underneath the 200-day moving average. We've got COT reports pointing to the downside, and we've got major levels of resistance just overhead. But with that all said, we can't deny that gold is making a nice move here in terms of the breakout zone that we talked about yesterday. So yesterday, we covered the fact that gold at this level here consolidated for quite some time. We did get the nice break of this trend line, but then we said the very next thing is we want to see price break through this previous consolidation zone. That would be where we start to consider, more seriously at least, the idea of a bigger bullish run here headed into April. So let me just be clear that I'm not taking any trades on gold right now. I'm not jumping into any positions, but I do think that there's arguably some bullishness here in the move for gold. But again, what I really would like to see is, I think today we get the COT report, or no, tomorrow we get the COT reports updated. So each Friday it comes out, and that should give us an idea as to what big players in the gold market are doing. If they pick up some long positions, you might be willing to, if you're a bull on gold, you might be willing to look at some of the ideas for looking for bullish setups off of that catalyst. But again, that's kind of what I'm waiting for, just to see a shift in the money flow in terms of the big players. But arguably, we have some very impressive bullish moves here this week. We did break through this previous level, and something like this, honestly, is not the worst technical setup that I've seen in a while. I think it's pretty nice, actually. However, like I said, for me, just waiting to see that confirmation of the COT reports. I want to see that there was actually some pickup by the big players on gold, which, that's usually what drives the price higher. But, depending on how much strength, how much bullishness there was in terms of positions picked up, that's what I'm going to keep an eye on going into the COT reports that we get on Fridays. So keep an eye on that. By the way, you guys, if you want to check the latest COT reports, head over to our website, a1trading.com. All of this stuff is free. You just go to COT reports right here, click this, and then you can click anything you want. So if we were to go down to gold here, for example, just because we're talking about it, we can go down here. We can see that lately, this is what I meant by lately, smart money has been basically just selling gold, right? There has not been much of a buy interest at all, at least in recent net positions of non-commercial hedge funds and institutions, okay? So for now, there's no rush for me to buy gold. However, from a technical view, keeping an eye on this, we did put in a nice double bottom. We broke out of structure, and it does seem like things are reversing. So keep an eye on this gold trade if you guys are watching it. The last thing I will say is that if the COT reports come out and they are like not very impressive, like they're almost bearish or just like a little bit of buying, honestly, I would still be looking at some of these key levels for sellers out there who are looking for a chance to sell gold again. I would say that if the numbers come out as the COT report numbers come out this week and they're just like not that great, I would say honestly selling this area looks pretty good to me. Of course, as always, these are not signals or me telling you to do X or Y on your account. This is just me sharing my opinion. So please remember that as listed in the disclaimer down below. I'm not here to tell you guys what to do with your money. I'm just sharing my thoughts and opinions. I see a lot of you guys in the chat probably with some questions, and I just want to just say I'm going to try and do a little bit better at reading the chat. It is difficult just to do both at the same time. Somebody sent me a message saying they tried to ask me a question multiple times and I didn't see it, and I do apologize. But again, it's kind of hard to like lead the conversation and also read the chat as fast as I can. I do my best, but I'm not a great multitasker, I'll be honest with you. All right, so yeah, Dade says, here's a link to the website, bookmark it for later. If you guys are in the chat and you want access to the stuff that's on the site, there's a link there for you to check out. But yeah, I think gold, I mean, still looking very, very promising on this upswing. The thing is, however, sellers are still in control, and I would be watching this 1770 mark very, very closely, because if price drifts up there, I would argue that you probably see some longer term sellers start to get interested, and maybe even more interested if we made a move up to 1800. The gold bears out there might be looking to sell into that upwards pressure. So just keep an eye on that. This is what I'm saying is, a lot of times people get very excited about a potential reversal, but the problem is there's strong trends for a reason. Now, I'm not saying that gold is absolutely going to plummet. I'm saying be aware that as a buyer right now, you've got a lot of resistance up overhead. All these sellers, all this institutional money that has been selling into gold, they're not just poof gone, right? They may still want to pick up more short positions. So keep an eye on that. That's what we got on XAU USD. Why don't we take a look at the euro dollar today, see what's moving with this guy. And we can see that this one is still trying to chug higher. Now, I will say what I really liked yesterday, Frank pointed out that we did get some nice rejection. He sent me a text right after this and said, hey, Nick, did you see that rejection on euro USD 4-hour chart? And I literally meandered my way over to the chart and I said, yep, I see it, bro. So it's funny how that, when you have trader friends, it's funny how they will see the same stuff as you after time goes by. But yeah, so Frank sent me that message. I looked over at euro USD and bam, we got rejection there. Pretty strong rejection too. You can see we got a little bit of follow through, but it's really going to come down to, with euro USD, it's going to come down to the bulls and how strong of a case they have here, similar to gold on this little rebound. Are they going to keep trying to push these higher lows, or is it going to crumble? That's the question. We don't know exactly. I have a question almost like every other day. It feels like somebody asks, how do you know it's a reversal or a pullback, right? You don't really know with certainty. That's the easy answer. You never really know exactly if the market is going to reverse or if it's just pulling back. But I would argue, for me, I'm still treating this as a pullback until further notice. What would constitute further notice? Well, if we started seeing a break of this trend line here that I pointed out, that would be sort of a more serious reversal in my view. But that's not where we're at yet, and I still think that there arguably is some sellers resistance here. We definitely have some that I'm watching here. This is my most interested area because I think in this case, there may be some good risk to reward on the swing trade side of things. Let me show you just a setup that I've been looking at is, if price were to drift up here, risking something like 50 to 100 pips on this move here, I'd have to look at it when it gets closer, of course, if it does get closer, but a move back down to 1.170, I think is possibly in the books, which gives some really good risk to reward if that were to set up and play out the way I'm hoping it for. But this is, again, one idea that I have on euro dollar going into probably next week, because it doesn't look like we're going to get there today. But again, short-term little rejection. If anybody caught that little dip there, then congrats. I thought there was some nice little follow through, but then, the bulls still seem to be trying to push things higher. You can see we got the rejection here on the 1-hour chart and then sold off a little bit, dropped from the highs there to the swing low, probably about 50 pips. So a nice little intraday pullback. But then we did see some strength come into the euro dollar this morning as buyers basically took it over in the New York session here. So where do we go from here? Well, again, like I said, one more thing to watch out for is we're doing these little higher lows right now in the market for euro dollar. If you're a bear like me, one thing that you probably would also want to see is you'd want to see sort of a break of this little pattern. You'd probably want to see a nice break, a nice push lower, and then start to see, resistance come back into play. Because right now it does seem like support is holding, whereas resistance is just getting broken. So how do you know when that's going to reverse? Like I said, you don't exactly know. But for me, treating this like a bigger term pullback, looking for longer term sell setups is sort of where I'm being patient, right? So if price were to drift its way up there, if price were to give me that discount, I am bearish on the euro and I'm bullish on the US dollar. And the main reason for this is because the US is sort of outpacing in terms of vaccine rollouts and GDP growth at this time. So I am more of a bear on the euro area. Again, no, I'm not casting any shade to my friends over in Europe. I'm just saying that from an economic standpoint, I think that the U.S. right now is set to outperform and probably will outperform for the rest of 2021. So in my view, the euro dollar, until we get some sort of shift, is really a sell. Ever since we had sort of the elections finish up here in the United States, as soon as we sort of prioritized the back to stability, back to, what have you, what's the word I'm thinking of? Back to normal, just going for that vaccine rollout focus. I think things have really shifted and back towards the US dollar's favor. We were in an incredible bullish rally for the euro dollar as things in the US were definitely uncertain going into elections. People didn't know who was going to be the president. People didn't know if there was going to be some sort of giant civil war, right? There was a bunch of fear here in the United States. And regardless of your opinion there, I don't care what your opinion is, and you don't care what mine is. The point is, there was a lot of uncertainty. And I mentioned yesterday, I made a little point about this, that markets don't like uncertainty. When people are fearful, when people are not sure of what's going to happen, they tend to clam up and they tend to hide from risk, right? And that's kind of what we were seeing as people were favoring the euro, buying the euro, selling the dollar. Well, when things sort of shifted back to normal, we had sort of the presidential drama calm down a little bit. We sort of saw things start to shift back the other direction. Now, I am by no means, I'm just going to clarify, I'm not saying that it's because Joe Biden is the president or Donald Trump is the president, because we had a bearish euro dollar with Donald Trump, and it seems like we have a bearish euro dollar with Joe Biden. So it's not party or political or anything like that. It's more stability, right? The U.S. doing decent or doing well to outperform and sort of just back to normal. Arguably, we still got a bunch of weird stuff going on and the world is still crazy, but you see what I mean. Normalcy is good for markets. Markets like when things are calm and things look promising. So with that said, I am still bearish on the euro dollar until further notice, until we get some sort of shift. I'd love the idea of a move back to resistance, and that is mainly what I will be watching for. If I take any trades, as you guys know, I will share them inside of the private group with members. Every trade that I take, when I take it, is shared with full breakdowns, charts, analysis, fundamental reasoning, etc. So that is what I'm thinking on Euro USD. Keeping an eye on that 1.2 level is the main point of interest for me. If I take the trade, like I said, all members will know about it. Let's take a look at the pound dollar today. Not my favorite pair right now to trade. It's been very weird and sort of back and forth. We got a really strong sell-off here, formed some fresh supply. Seems like things got really bearish at the 1.39 mark and then dropped like a rock there as people favored the US dollar over the pound. Very interesting because we had sort of a quick sell-off on a lot of these commodity currencies and the more growth-oriented economies such as the UK, Australia, Canada, etc. So I ended up picking up some positions yesterday, so we'll keep an eye on those for those of you guys who are members. We'll see if this concept plays out, but you guys know that I am overall pretty bullish right now on market recovery, which means I am more interested in buying the higher potential growth economies like the Aussie, the New Zealand, the CAD, the pound, right? And so keep an eye on that. I'll be updating anything I do with my position there. But when we look at pound dollar, the big thing that I wanted to point out is that we're sort of in this weird zone where we've got support here and we've got resistance here, and overall we're sort of just going sideways. So for those of you guys who are watching the pound, if you're looking for a breakout, if you're looking for a big move on the pound, keep an eye on these zones. Really, I think that for price to get super bullish, we probably want to see the breakout there. I think that there might be some great trade setups back to the highs if things were to get bullish. However, the other side matters as well, because look at this. I think for the first time, we're really starting to see shifting here on the pound dollar, and very possibly that vaccine story, the UK rolling out vaccines, arguably one of the best big countries to do so, maybe sort of meeting its end, right? Maybe that story is no longer as dominant for markets. We'll see. It's been driving the headlines for about a year now, but we'll see. Maybe we have more of a sideways market inbound or even negative. And I honestly think that with the slowdown here with the pound dollar, it's probably one of these two scenarios. Either scenario one is we just see a drop or we see a continued move down, or number two is into a range-bound market just back and forth, which I honestly think is probably the more likely candidate, as the pound and the US dollar are both sort of outperforming overall compared to other currencies and other economies right now. So until that changes, I think that this is probably due to range, which we've kind of seen, right? We've seen back and forth on the pound dollar. So I personally wouldn't be looking for massive moves on the pound on the daily chart or the 4-hour chart. If you're looking for short-term swings, there might be some moves, like I said, just playing the back and forth for now. So, looking to buy support if you're a bull, looking for, moves back to previous resistance and supply zones, and just trading the back and forth might be the move right now on pound dollar. So that's my opinion. If I were to trade this thing, I'd be looking just to buy support, sell resistance, buy support, sell resistance. And who knows, we could enter a period of time. It's not out of the question that we could enter, 6 months of this. Traders forget that markets, they don't actually trend most of the time. Most of the time, markets do not trend. Most of the time, markets just go back and forth. Even in the context of a strong trend, look at what happened to pound dollar for about a month and a half. Sideways trend, breakout, right? Sideways trend, breakout. So remember that it is very possible for the pound dollar to not go anywhere for a month, 2 months, 6 months, right? It's possible for that to happen. And if you really want to trade the pound dollar, in my opinion, I like the idea of trading the back and forth for now. Looking for resistance points to sell at, looking for support to buy at, because I am overall pretty bullish on both of these currencies at the moment. Now, if that changes, if the data changes, if we get fresh economic news or geopolitical news or something changes that drives things one way or the other, then maybe it's back to trend following 101. We try and look for moves to go with the move. But for now, sort of seems like a range-bound market to me. USD pairs are highly manipulated. They're all highly manipulated, Carter. It's but here's the thing. Let me tell you this. Joe and I were talking about this. Joe is one of the coaches at A1 Trading. He's a 14-year trading veteran, and him and I are good friends, I would say. Well, Joe and I were talking about market manipulation. Do people run your stops and all this stuff? And you guys have to remember that if this is the Forex market, right? This is the FX market. People always say like, oh, they're running my stops. They're trying to stop out retail. And like, yes, maybe that a little bit of that goes on, but let me show you guys something. If this is like the Forex market, all of our trading, every single one of us combined, is probably about this much of the Forex market, just roughly. Okay? So, retail traders, a lot of times they get themselves thinking, oh, it's just the big money and they're just trying to take it from the small money. That is actually not really true. The reality in the Forex market and in the stock market and in any market is the big players who are managing billions and trillions of dollars, they're fighting each other. It's actually more institution versus institution, right? So it's big players versus big players fighting it out, right? So they're fighting it out. And we're just this tiny little island in this ginormous ocean, right? So remember that although it's very easy to say like, oh, they're targeting us. Oh, they're manipulating the retail crowd. Like the retail crowd is so insignificant compared to the major amounts of money that move through the Forex market every day. We could all take a trade on the same pair. I'm not saying we would do this, but I'm saying like if we all took a trade on the same pair at the same time, we probably wouldn't even really make any impact on the chart at all, right? Actually, all of us in this stream, there's 455 of us right now. If we all went all in on one pair, we probably wouldn't move it unless one of you guys manages like a $10 trillion hedge fund, right? But the idea that retail is just getting targeted and that, they're just stopping you out and they're targeting you specifically is not really the biggest valid thing to think about, in my opinion. Why? Because there's not that much money in what we're doing, right? For the big players out there who are trying to make really big money, they're fighting each other. Hedge funds are trying to beat hedge funds. That's why you might see Goldman Sachs go long on one thing and JP Morgan go short on the same thing, right? They're fighting each other. They're trying to outperform each other. And that's their biggest competitors is other major market players like themselves. They don't care about us. We're so small. We're so insignificant to the overall thing. So just a little reminder there. Again, it's very fun and kind of cool to think about like, institutions manipulating us and stuff like that. But the reality is we're just so small that they don't really care about what we're doing. Happy Day comes in with the comedy. Happy Day says, are you telling me that my $100 trading account has no impact on the market? Impossible. Happy Day, thank you for the comedic relief. I'm not telling you that, man. It has a lot of impact on you. It just doesn't really have a big impact on the actual market, right? Hey, and you know what, you guys? That's not a negative thing. That's a good thing. It's a good thing to be a small player, because as a small player, we have an advantage. We get to slide under the radar. People don't really care about what we're doing too much, and we can sort of ride the waves of what the bigger players are doing. So the disadvantage of being a huge player in the market is that if you want to take a buy position on the pound dollar, you got to buy. You got to like build a position, since your market positions might move the market. So, because you can't, if you're a ginormous trader and you have like so much money at your disposal, if you bought all of your position right here, you'd be bidding the price up. So you'd be like buying and you're getting worse prices, right? You almost want, if you're a big player, you want to build a position here where you buy and you buy a little bit more here and you buy a little bit more here so you can move more stealthily. Us as retail traders, we don't even have to think about that. We could buy as much as we want right here and it wouldn't impact the market's price much at all. Nick, are you CCing people in emails? No, I'm not. That's probably a fake person. I've been putting that in my comment section recently. There's like fake people who use my name and they sort of try and get people to send them messages. So keep an eye out for that. Just report that stuff. Happy Day was more of a sarcastic comment. Yeah, it was. I knew it was sarcasm. We are getting wrecked by the bots. Is Nick genuine, guys? Hardik, no, I'm not. Don't trust anything I say. Or anybody else on YouTube for that matter. Honestly, don't trust, test. Always test concepts, test theories that you hear on YouTube. Like if you hear somebody talk about a certain candlestick pattern, or you see somebody talking about a certain strategy, always test it. Never trust somebody just because, they seem like a nice guy or whatever. Like I think I am a nice guy, and I think you should, still test what I say, because it's important for yourself to understand what's being said and why, right? You don't want to just trust anybody blindly on the internet. Ooh, look at dollar yen, you guys. Look at this. Dollar yen just sold right into this zone, and this looks really, really interesting. Looking at the 4-hour chart here, dollar yen just dropped hard, and things are looking very, very interesting as we pull back really hard like this. So dollar yen has been in a very solid uptrend. And I mentioned the other day, I said like, hey, if this thing really were to sell off, it could very quickly come back to a major level like this. And so that's where we're looking at right now. If you're a bull on the dollar yen, I would say this is probably a pretty interesting area to keep an eye on. There might be some decent risk to reward here if we were to go long, for example, with a stop underneath this point here and maybe just even a move back to here. That's a 2-to-1 right there. That's not the worst trade I've seen all day. It's not bad. As always, I'm not telling you what to do with your account. This is just me sharing my thoughts, but I do think that this is interesting because you've got sort of this area here, right, where you got sellers, sellers, sellers. Price broke out. Look at this clean breakout. Beautiful break right through. And on the retest here, if you're a bull on the dollar yen, probably not the worst area to consider this past resistance now acting as support. So keep an eye on that if you guys are trading dollar yen or you like dollar yen. But please also remember, be careful with your stops here because this thing has been up for quite a while. And if the trend does decide to reverse here, you probably don't want to get caught holding it for too long if it were to drop further. Could it happen? Absolutely. Do I think it's going to happen? I don't know. I think it's more still of a bullish currency pair until further notice. But we will see, again, what the data or if there's anything that fresh comes out that really changes directions here on dollar yen. I like to say on the channel that, fundamentals sort of trump technicals in my view, because at the end of the day, if something comes out dramatically different for the U.S. economy or the Japanese economy, it's going to send this thing breaking through all sorts of levels. It doesn't matter what your support levels tell you. If the economics behind what we're actually trading, if they drastically change, the market won't care. The market will not care about the technical analysis, right? The market cares about value. The market cares about momentum. It cares about what sentiment and what outlook is. And if we get a drastic change, technical analysis I'm saying it is valuable. I use it all the time, but I'm saying that it is not the end all be all only thing in my opinion. I like to use the story of what's going on in the world plus my technicals. So the fundamentals and the technicals. So overall though, if recovery is set to continue, arguably dollar yen should continue higher. That's what we've seen as the market has really shifted into like a positive global economy look. We've seen dollar yen just outperform or just the dollar outperform the yen quite substantially. If that all is set to continue, then if you think it's going to, dollar yen still looks good to me. So I'll keep an eye on that one. I do have some yen trades open as well, or a yen trade open right now. So we'll see if we can get some of that yen to pull down now. New U.S. dollar data coming out today. What's coming out today? Let's go look at the old Forex factory really quick. So we have today we have Fed Chair Powell speaks. What is he speaking about? Due to participate in a panel discussion about the global economy at a virtual International Monetary Fund seminar, audience questions expected. Okay, yeah. These will always sort of be points of interest. Will they move the market massively? Maybe, maybe not. It just depends what is said. But again, the market is like a feather with this guy. If even the slightest thing is drastically different or comes out as perceived more bearish or bullish than what was known, it can cause the market to move dramatically, especially these U.S. pairs. And sometimes people say, oh, this is why the U.S. is manipulated, but it's just because the U.S. is the biggest, right? The one of the biggest sort of economies out there. It's not, I believe it's smaller than China, but it has a lot of impact on global. It is like the global currency per se, at least for the time being. Right. So when you look at what's going on with the U.S. dollar, anything that the Fed says or has policy shifts on can really cause some movements in the market. Let's take a look at dollar Swiss while we're at it. See if there's anything of interest here. We're just shy of this zone here that I talked about yesterday. I really like this pullback if price were to come down just a bit. Keep an eye on this one. If you're a bull on this pair, I think that's probably an interesting area to keep an eye on as well. You've got the previous time we swung low like this, we bounced off this level 3 times, 1, 2, 3, and then rallied. So if price comes down to that point, if you're a bull, you'd probably expect bulls to try and hold that. And there could be some good value on this trend at this pullback here. So that's one to keep an eye on as well. Higher than expected U.S. UI numbers today playing into the U.S. dollar. Totally could, right? Anything or it could be, right? Anything that is better than or less than expected can dramatically sort of push price around. I don't think we had any other major news today, right? Is that pretty much it? What about tomorrow? Do we have anything on Friday? Yeah, we have CAD unemployment. That's right. Yeah. Frank and Bart both did a little article write-up on CAD unemployment on the website. If you're not already following the website, head over to a1trading.com. This is our website. CAD employment report if you want to read up on what's going on. These two guys, Bart and Frank, both did articles for you to check out. So go read up on those if you want sort of analysis beforehand, before that Canadian unemployment. They both have opinions as to like where or what the numbers could be and what it could mean for the Canadian dollar. So if you guys have any interest in the CAD, trading the CAD or keeping up with it, definitely check out those write-ups that Frank and Bart did. Plus, I paid them to do that, so go check out their articles. Somebody's got to read them. I'm kidding. There's actually a lot of you guys that read the articles that they put out, which is really cool just to see. We've sort of branched out, like the company, A1 Trading. We do all sorts of media content. Obviously, my channel here is one piece, but we also do articles and we do other videos and we do content for brokerages. So it's kind of cool just to have readers on our site. But again, it's free stuff to you guys, so you might as well just check it out and take advantage. Jenny Pristine, the bot, says, finding it difficult to trade and earn profits in the Forex market? Contact expert Donald. He is an experienced trader. If you guys ever see messages like that, just remember that is just a scammer somewhere trying to steal your money. So they don't have some sort of magical way to make money. But if you see those messages, if you see spammy messages like that, always remember, just report those people. They're trying to scam people and trying to be awful human beings that hurt others to make a little bit of money. Don't be that guy. That guy's the loser in the room. Might be a little harsh, but honestly, dude, like, come on. Don't be that. Like, if you're sitting there, think about if your life was just spamming other people's YouTubes to try and get unsuspecting or naive people to send you their hard-earned money, and then you just ghost them and you steal their money. That's just awful. Anyways, pound yen. Look at this one. Another one, as yen strength sort of seems to be the story of the day. Actually, we could pull that up on the currency heat map too. Let's look at this. Yeah, lots of yen strength today. I forgot to do this at the beginning of the video, by the way. New Zealand and yen strength. That is a weird combo. That's a very, very weird combo. New Zealand strength and yen strength, because this is a risk on currency and this is a risk off currency. Maybe something else came out for the New Zealand that I'm not thinking of that's bullish, but New Zealand pairs seem to be moving nicely today. And then you've got the yen pairs, which are also lots of bullishness on the yen, which is causing some of these pullbacks. But to me, this is good because I like the idea of yen pullbacks. Gives me opportunities to maybe take some more trades, as I am still pretty bullish on commodity currencies and bearish on the yen. So these pullbacks may be opportunities for me to look for stuff. What is the 200 MA for? It's just a longer term view. I don't use it as some sort of like magical entry or exit strategy. I just use the 200 as a slow sort of overview of the trend. When the 200 is in my favor or like in the same direction as where I'm looking, I like that a lot, especially on the 4-hour and daily charts. But look at that. Yeah, yen strength really coming in today. We're seeing the GJ go down because we've got GBP pairs moving lower relative to a strengthening yen today. So when the yen gets strong, it really can just run. So we got to be careful about that as well. I say we because I have positions that I'm looking at with the yen. So, it's always one of those things. Keep an eye on risk on, risk off sentiment. Risk on, usually the yen struggles, and risk off, the yen thrives. So as we see this sort of happening, we got to go look at the news and figure out sort of whether or not we think it's going to continue lower. How often did you refer to fundamentals in your first year of trading? Was it as much as you do today? Kanya, no. Fundamentals are much more difficult, in my opinion. I think probably in most people's opinion. Would you guys agree? Like fundamentals, there's a lot more to it. You got to look at, read up on the latest developments. I heard someone say that consistent profits equals consistent work. And it's very true. Like you have to keep up with what's going on if you want to trade with fundamentals. Technicals, I think, are much easier because everyone can sort of draw zones and lines and watch moving averages. Like that stuff is fairly simple. And not to say that it's not useful. It's just that I like the idea of combining that concept, looking for pivotal areas and structure like that, and then also tying it in with what's actually happening in the world. A lot of people got burned sort of shorting the pound yen as it just went up and up and up. And I had no interest in getting anywhere near selling the pound yen because of the fundamentals. The fundamentals were so strong for pound yen. And they still, in my view, they still are until further notice. I'm treating this stuff like a pullback. So if I'm wrong about that, then of course I'll take some losses, and that's okay. But the idea is that there'll be smaller losses, and that if I can catch a trend continuation, if you were to catch a move like that, that's a great, fantastic continuation of the trend. And part of that is based on my fundamental bias to the long side, right? So fundamentals, I think it's not something I can teach you in just like one stream or even 2 streams. Fundamentals are something that you have to spend a lot of time reading, going through what's going on in the world, keeping an eye on economic figures. I did a full like free course on my channel about it if you want to go watch that video. But still, it's not something that you just learn just looking at a simple resource guide or anything like that. It takes a lot of work. So no, I didn't use it my first year. It took me time, and probably more in my second and third year did I really start getting into it. And now I'm in about the 5th year. So hope that makes sense. Hey guys, leave a like down below if you're enjoying the stream. I see we've got 500 people in here and 137 likes. If you guys could just like the stream down below, it helps me out just to, continue to do these free streams. I don't make very much from YouTube ad revenue on these streams. I think it's like a little bit, but it does help just to boost the stream and keep me coming back, and hopefully it attracts more people to come in and hang out with us in the future. Before I go, I do want to say, if you have any interest in joining our private group, all of the trades that I take, if I take any at all, I share inside of the group with full breakdowns in terms of analysis, charts, fundamental reasoning behind every trade that I take, and so on. If you want to see my trades in real time, join the private group. There's a link down below in the description, and there's a promo code for you guys who make it to the end of these streams. You get I think it's like $5 off or 25% off the gold package. So check that out if you have any interest in joining. With that said, I want to just go ahead and wish you guys a happy weekend, because unfortunately I won't be here tomorrow. I'm going to be out of town. And so this is the last stream for the week, unfortunately, but we will be back next week. Thank you guys so much for being here. I hope you have a great rest of your day, and we will see you back in the next one. What's up, you guys? I'm so excited to announce that TradingView is going to be sponsoring our content here on YouTube. TradingView.com offers a wide range of trading software and charting tools, and they are my #1 favorite place for everything charts. I've been using them for myself for years, so it's very easy for me to get behind TradingView.com. On top of all of their fantastic charting software, they also have a vibrant community of traders with millions of active users. You can join in on some of the conversations going on there, as well as access some of the research and ideas being shared by fellow members. Whether you use Bollinger Bands, using moving averages, or pattern trading, whatever you do, TradingView has so many different tools, and even the ability to program your own custom tools right inside of their platform. One of my favorite things about TradingView personally is that I can take my laptop anywhere I want. I can access my TradingView.com account, and then I can log into it from my phone or a different computer and still have all of my charts loaded, which is fantastic and super convenient for being in different places like myself, where I have different charts that I am looking at. Recently, some of the nice people over at TradingView set me up with a pro version of their platform, and it is fantastic. I encourage you though, if you haven't already signed up for a TradingView account, sign up for one for free. There's a link down below in the description to try it out. And hey, if you really like it, try out their pro version. They're supporting the content that you guys see here.